Hi, Jonathan York from Bay Financial Partners, looking at investment markets. Really just unclear yet as to the actual outcome of the Thanksgiving holiday in terms of the spread of COVID in the US. Certainly there was near a record number of the travellers out there, and it's just going to be interesting to see how the cases now come forward over the next 1 to 2 weeks. Because certainly leading up to the Thanksgiving holiday, there were increased cases in a number of states, and so it's just going to be interesting to see how that sort of plays through. But on the plus side, the vaccines are much more progressed now, and indeed in the US they're even talking about having flights now to transport the vaccine and actually potentially getting it distributed and into the community before the end of the year. Now, on the back of the rising cases, and certainly the lack of cooperation between the Trump administration and the Biden transition, there was a little bit of a sell-off towards the end of November in U.S. equities. But the start of the month in December has seen a little bit of a bounce now, and it's just going to be very interesting to see how it plays through into year end. Traditionally there is normally a little bit of a year-end rally, but it's just going to be interesting to see if that can transpire now on the back of what was a pretty major move in November. Certainly, the major stumbling block has been a sort of stimulus package, but now you've got the Biden administration, transition team working on that. Potentially that could just give a little bit of a boost to the market. Interesting, the Trump administration is still pursuing the legal challenges, but really just getting thrown out of court left, right, and centre really. And most of the time it's coming, the rulings are coming out that the case lacks merit and no evidence is provided. But yet still the Trump campaign hasn't conceded. President Trump still hasn't conceded. And also as well, they're still banging the drum about widespread voter fraud. Indeed, in one case, the recount cost about $4 million, and it actually increased President-elect Biden's majority. So certainly as we head into January 20th and President Biden-elect actually taking over, it could be very interesting to see how that transpires. There is even some talk that President Trump will not be at the inauguration. But one of the byproducts of COVID has been the US households potentially have about $1.5 trillion sitting in savings accounts. And if that gets invested into the market, even if half of that gets invested into the market, that could still give a pretty major boost to US equities. Oil on the back of that, it's trading pretty strongly, 42 to 44 bucks a barrel. And as I say, just be interesting to see how that continues into year end. UK just about to come out of lockdown. They had this partial lockdown over the past few weeks, and certainly it seems to have helped. Certainly in the northern cities where cases have come down dramatically by sort of 30-40%. Now, obviously, the hope is that that will be enough now to have a sort of a more sort of normalised Christmas as sort of cases are falling. And again, the reason why cases are falling is because the widespread testing, which is now sort of bringing forward cases, they can then self-isolate and stop the spread. Likewise, in Australia, you're seeing sort of cases falling. Even southern Australia, that had sort of partial lockdown, and started to see those cases falling. And the Australian economy is certainly not back up and running sort of pre-COVID levels, but it's certainly getting sort of back onto its feet and sort of pushing along at a pretty good rate. Likewise, here in New Zealand, really being buoyed by the housing market. And, it's just very interesting to see what's going to happen there because, with record low interest rates, a lack of supply, increased demand, it's going to be very hard to see house prices sort of coming off the boil anytime soon. Despite what the finance minister may write to the Reserve Bank asking them to sort of try and control house prices. In the fixed interest space, a couple of offerings out there. Kiwibank have a capital note, 10 years, looking around sort of 1.9 to sort of 2.5 as an indicative rate. Ryman Healthcare as well have a 6-year bond out there. Rate hasn't been set. Indicative indication would be around sort of 1.7 to 1.8. Now, if you're interested in those two offerings, call us on 0800 867 323. And really quite interesting with this year, obviously, with the sort of COVID sell-off back in early March. For those that did sort of exit the market because of the sell-off there, it's really been quite interesting because now it would cost you probably missed maybe sort of 35-40% move on the upside. Now, obviously, in this low interest rate environment, it is pretty tough out there. But if you are looking for income options, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. And we look forward to speaking to you soon.